Hello and welcome, everybody. This is the Hot Corner Insider live strategy session. I'm your host, Steve Straza. I'm the director of research at All Star Charts. We do this show once a week, every Wednesday, 1 o'clock Eastern Time, right here on Stock Market TV. Thank you guys for being patient. A little bit of a late start here today. Kind of a lazy week, though. Lazy week. I'm not finding much to do in terms of new setups. I want to talk mostly about that up front before we get into some new setups. There are going to continue to be new setups beneath the surface. I think stock pickers market is going to be the theme into the last 3 quarters of this year. I'm getting ahead of myself. Nothing we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, head to www.stockmarkettv.com/terms. Hello, everybody in the chat. Nicholas, Dan, Frey, Paul, Dawson, Robert. How about these commodities? How about these commodities? Not just in the futures market. Energy always kind of steals the headlines or the spotlight. A lot of talk about energy, but it's more than energy. It started with more than energy. It was an ag story coming into the year. Participation is simply broadening, which is what we want to see. You can argue this commodity super cycle began, I don't know, almost 4 years ago off of the pandemic lows in 2020. If I were to zoom out on this chart, sure, this is a nice base, nice little consolidation. But if I were to zoom out, go back about 2 years off the 2020 lows, things were tripling, quadrupling. I mean, 300% in large cap energy sector spider, XLE, from its 2020 lows to 2022 highs. This is the Thomson Reuters CRB index, commodities index. I think it's like more than 40% or more than 40% energy, really heavy crude oil exposure, gas, the other derivatives. But the rally's broadening. So big leg higher. You can see it a little bit here in this natural resources fund chart. This is IGE. So big run off the pandemic lows. 2 years, in many cases, 2 years of sideways, nothing, just digesting the monster gains from the years prior, consolidating constructively, suffering far less severe drawdowns than growth stocks, other parts of the stock market, other parts of the commodities market even. We're talking about energy futures, right? So this is iShares Natural Resources. But the theme right now today is, sure, while it looks like we're gapping right through these prior cycle highs, breaking out in a big way, logical level of overhead supply. Materials as well. I could say materials are breaking out. If I pull up a chart of XLB here on my lower screen, yeah, materials sitting at new highs right now, or at least above the prior cycle highs, right? Not above their highs from a few days ago. You could argue the breakout in materials is more or less underway. However, some backing and filling here would make a lot of sense. Very logical level. It's the same in energy. Even more so. Zoom way out on energy. It's not just the highs from a few years ago. It's the highs from a decade ago and 2 decades ago. Almost. Monster base. Something we 100% want to be involved in. We want to be involved in for the longest time frames. Once we have a confirmed resolution here, this could take time. We've seen these patterns over and over and over again. We were talking about some huge leaps. I think it was December of 2026 on our analyst call today, right? Because we want our strategies to be a reflection of the chart structures. This is a multi-decade structural base breakout. We don't know if it fails here again. It's already failed at the upper bounds 1, 2, 3 times in recent years. I don't know if it fails here again or if this is it. Monster breakout, we keep going. However, historically speaking, we have never seen weekly win streaks. This just speaks to the relentless bid for these assets right now. They've been up every single week for like 10 straight weeks, depending on what we're looking at. This is 9 straight weeks for the explorers and producers, most in history. These funds were launched almost 20 years ago. So do you want to be entering new long positions here following, some of the best momentum or biggest win streaks in history? It's kind of a trick question. Do you want to be entering positions after such extreme momentum? Yeah, you do over longer time frames, but you really don't over shorter time frames. Consolidation here is deserved. This is oil and gas services, same thing. New record going on, I believe it's 9 weeks here this week. I think the best before this was 6 or 7. So long term, super bullish. Short term, be patient. Materials, sector spider. 10 consecutive up weeks. Going on 11. Do I want to own materials probably for the rest of the year? Be overweight this sector along with energy? Yeah, probably. As it stands now, yes. Do I want to open new positions or, add to positions in materials right now, right here today? Not most of them. Doesn't mean we can't find some. But broadly speaking, patience probably pays right now. Also, along with that cyclical value, broadening of the rally type theme, Big Six Bank Index. This is the 6 biggest banks in the United States of America. Equally weighted in a custom index, overhead supply. I could go through the financial subsector indexes and show a lot of the same. Capital markets comes to mind. KCE, IAI. Now, how about the other stuff? I'm talking about new leaders, right? We're talking about financials here, energy, materials. These are the new leaders. How about the old leaders? This, in the lower pane here, we're measuring the percentage that the Philadelphia Semiconductor Index is away from its long-term mean, from its 200-day moving average. So this is not a record reading, like some of the stuff we just talked about with the win streaks and materials and energy. But we're stretched, extreme. About 40% just recently, 25% here today. Above 200-day for, readings in this ballpark. Yeah, we got it in 2021. Then you'd have to go back 20 years. The dot-com bubble. And then the fallout thereafter in 03. Crypto too. You guys know me. If I'm not loving the present opportunities in the stock market, what do? Go find another market that's trending. And again, when you look beneath the surface, can we find cryptos that I might want to buy? Almost every day, sure. But broadly speaking, treat these like indexes. These are 3 of the top 5 largest cryptos. Bitcoin, Solana, Binance, prior cycle highs. Not saying they can't get it done. Not saying you can't see a monster breakout. Here today, tomorrow, while we're sleeping, probably, knowing crypto. Odds are, digest a little bit here, right? Maybe see some profit taking. When I look at these charts, I don't want to be aggressively adding new positions. That's the theme. We're going to come on here next week, the week after, the week after that, probably be talking much differently. This is very tactical, right? Where we're hitting overhead supply levels. I'm seeing RSI 14s, momentum readings in the 80s, like everywhere I look. 10 straight up weeks, right? These extreme momentum streaks or momentum readings. It just seems a little bit overdone here in the short term. That will change. And we'll be wanting to buy stocks like ConocoPhillips, completing a almost decade-long base, quick leg up into this little range, like most energy stocks over the past several years now, sideways between 86 and 127.50. We haven't marked here. I think you're breaking out now in Conoco. Again, this is one of the majors here in the United States, and just since March, up almost 20%. So big move already, just over the past few weeks. Maybe allow for some cooling off here, get a little coil, a short-term continuation pattern, and then strength out of this range. I love it. Long above 127.50, target 193. Pioneer is another good one. And this is what we call a base on base. Just pulling up the chart here. Not quite completed, the shorter term base shown here on the right-hand side of the chart. I think that level for confirmation is about 286, right? That would be the highest from 2022. But you could see just the shape of it, you know? Really nice rounding bottom reversal coming off of a decade-long consolidation pattern breakout. So above 234, the bias is higher. I think you get confirmation that the next leg up is underway. Above 286, next stop would be the 161 at about 350. Let me just check over the chat here. Silver. I don't think we have any silver stocks in Hot Corner. I was trading First Majestic calls. Took profits today. I think just like what I'm saying about energy materials, silver is one of the material subsectors. Same thing for silver. Huge run. Looks like you're getting a really nice breakout here. Following gold higher. Everything that we want to see, right? If you're a gold bug, we are just starting to check every box right on down the line. You want outperformance from silver. You want outperformance from gold miners over spot gold, right? Basically, you want more outperformance the further and further you go out on the risk spectrum. And silver miners, junior silver miners, are as far as you can go. So finally starting to see that. I remember the last couple times gold was testing its range highs that it recently broke above, and we were saying, silver doesn't look good enough. Silver miners, gold miners, they're not really working well enough to support this big consolidation pattern breakout in gold. That's no longer the case. Getting all that support now. So I'm actually excited for precious metals. And that says a lot because they're not my favorite. Okay, commodities are rocking. I know, it's exciting. You know, I was just talking to Alfonso off air here, and commodity stocks get a bad rap. I mean, these things are fun. A lot of juice, a lot of beta. I mean, these things will put biotechs to shame in the commodity super cycle. You really do. You can generate a monster amount of alpha being in commodity stocks at the right time. People think of them as like boring assets. I think they're some of the most fun stocks to trade. Am I selling tech? I'm not, but it depends. What tech, right? I think you could be buying Google. I think you could still be buying breakouts in tech. We have two today that we're going to get to. So I will take profits. I got stopped out of some things, a lot of tech growth stuff late last week. And again, early this week. I'm more interested in the other sectors right now, but I don't think you want to throw your tech stocks away. Been saying that, actually. I think just as the bull market broadens in participation, our portfolios can broaden, right? Wavy, what's up, dude? VLO, Fang, MPC, Dawson, you got the right idea. Yeah. Gold. All right. MRO. Yeah. Yeah, you guys are crushing it. If these are the names you've been in, awesome. Okay, so it sounds like everybody's making money. Back to the charts here. Tidewater, TDW. Speaking of leaders, I mean, this one's been going. Another one that just comes to mind looking at this chart. You just get these names that are just monster leaders every cycle in every group. This is one of them this cycle, and this Vista Oil and Gas. I don't have the chart, but it's VIST. It's like every single day this thing's higher, and you got a little bit of a pullback recently. So we still love the leaders. USAC, big old base here. If we're above 2850, long towards 44, chairman, president, and CEO, Form 4 filer in this one. EOG Resources. This is, one of the preferred names among our fundamental friends. Clean against the prior cycle highs here, 133.50. Another thing you could do here is drop VWAPs from these consolidation highs. So that would be this like mid 2022 high here in EOG. I know I can't do it on the slide, but if I were to drop a VWAP here right now, you'd see it come in right around where this 200-day moving average is beneath current price. So that's just one more way to get confirmation that buyers are back in control coming off of this multi-year range. And you can replicate that, right, for most of these charts we're talking about. So Freeport here, you drop the AVWAP here where we have the red failed breakout circled. So 45.20, I think this one is already in the books. Completing a breakout now, if you want confirmation, you use that failed breakout around 52 from 2022. So against 45, I think is great. In fact, you could probably even let it dance here. Use maybe the pivot highs from last summer, which come in more around, 45 works. 45 is where you want it. We're trading at 49 here today. Target of 70, that's just the first stop. I think Freeport will have more in the tank once we get there. Commercial Metals Company, CMC, monster-based breakout, first target hit. Again, you see this multi-year kind of range, maybe not as long of a range as some of the other names that we're talking about, but big base into a little bit of sideways, some consolidation. But the underlying trend into these ranges is all not just higher, but higher in a big way. This was one of the best rallies we've seen from energy stocks, material stocks, my whole career, probably going back 3-4 decades. Where commodity stocks really just ripped, were leaders for consecutive years, and then just sideways digesting those gains, consolidating. And now for something like CMC, really clean against the pivot highs. I think 59 is your level here. Below it by about $1 here today. So this one would be a buy on strength entry with a target of 92. Celanese Corporation, CE. We were digging into chemicals, specialty chemicals. Chemicals is the largest industry group, actually, within materials. We come on here, we talk about precious metals. Everybody loves talking about the gold miners. We love our industrial metals. There's the agricultural stuff. But within materials, the largest names are really these chemicals names. So CE is one of them. Again, a really clean chart, multi-year consolidation here. We're zoomed in more on this one than some of these other charts that we've been showing. 175, I think that's your breakout, target of 230. Okay, before we go, great question in the chat. Am I selling tech stocks? No. If they break my level, sure, but I'm not just, I'm not in tech stocks anymore. Of course not. In fact, I think we could still be buying tech stocks. You want to buy the ones that look different from the indexes, the ones that are breaking out. Software, just like everything else, running into these prior cycle highs, right? This is the theme from the macro section at the top of this call. A lot of overhead supply. Software is no different. However, that's not to say that we can't look beneath the surface and say, hey, if this software leader is going to break out in this environment or in this tape where maybe money is coming out or profits are being taken in software, or overhead supply is being hit, we found resistance, and this one's breaking out, we still want to be involved, right? So don't throw out your tech stocks. Not yet. Definitely not yet. 237, I think the breakout's in the books for WEX, target of 340. One more. Parsons Corporation. I love this one because this is like the tech of industrials. So these guys are engineering and construction software platform. How good is that? Got the industrial exposure. It's still a software stock. Maybe that's why it looks so much better than some of its peers. So you got this multi-year base breakout. We've talked about this one since last year, probably for 12 months now. So one target hit, two targets hit, coiling up so nice here. This is a really sweet, pennant formation that began, I don't know, a month and a half ago almost now. And we're just coiling here. I think Parsons, as soon as you get a breakout here above the pivot highs, call it 84. So we're $1.50 away here today. Long all day. I think, it's probably even actionable here with a stop of 79 at the 261.8% extension. Regardless, this is the kind of stock that you want to own. Secular leader. It's been so good. Like I said, gives you a little bit of industrials, a little bit of technology. Long against 79, confirmation at about 84, target 112. That's PSN. And, how many times have we said this and seen this? We just love it when the CFO is the insider, because the CFO is really the best at this. And we've gone through example after example over the years now on our calls saying, oh, wow, look, the CFO, he caught the bottom. Well, again, in 2022, CFO was your buyer right here in March of 2022, around $30. So he's looking at almost a triple here at current prices. I love a good CFO insider buy. 1.3 million too. Rarely do you see these piker purchases. CFOs, big money guys, trying to make a little bit of a splash here. So this one stood out at the time, still stands out here today. Love to see this stock keep working. If you guys have any questions, comments, concerns, want to say hi, shoot us a note, info@allstarcharts.com. And we'll be back here next Wednesday, same time, same place, 1 o'clock Eastern time, the next Hot Corner Strategy session. Until then, join us on the morning show every morning, 8:30 to 10 o'clock Eastern time. All right. Thanks, everybody. Yes, we do love our Kardashian bases. All right. Happy hump day. Everybody have a great rest of your week, and we will see you here next week.